The U.S. financial system nearly collapsed, and Jack Mallers says the only way out is printing trillions. The question is, will Bitcoin survive the fallout or dominate because of it? So in today's video, we're breaking down Jack Mallers' most explosive take yet from his Money Matters podcast. And he pulls out some headlines from different articles that are basically saying the U.S. will print the money. So this isn't just bullish for Bitcoin, it is a warning to the world, as he stated, that the old guard is changing and monetary policies are shifting. So stay tuned.
Feeling that meme coin FOMO kick in, like you missed out on Doge and SHIB and watching Trump soar to number 2? Don't miss your next shot at flipping the script. Flapjacks is more than a meme. It's deflationary, sticky, and community built with utility. Don't wait for FOMO to set in. Stack your gains now at flapjacks.xyz.
Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. Let's go to this first clip from Jack, where he underscores what Bitcoin truly is.
That I made a prediction this year that Bitcoin would diverge from its correlation with the stock market and it would start to trade more like gold. It would start to trade as the independent asset it is. It does not have earnings. It does not have a CEO. It does not have a product. Bitcoin is money. Bitcoin is its own monetary policy. It's its own instrument. It's a commodity-like portfolio asset. It should not necessarily be correlated to a basket of stocks. However, it has been.
So that is a good way to kind of wrap your head around what is happening right now. And as I've shown on my videos and others from him, we had this old monetary policy that has served us really well, where the U.S. has been and still is the world reserve currency, and they've been able to export their currency in exchange for goods and services from other countries. And we are seeing that break up right now in real time. And due to the efforts of the current administration to try to bring production back to the United States and prop up the middle class, that is also causing other countries to say, wait a minute, why do we need the US? Why are we importing this piece of paper? Why are we buying their debt? Can we survive on our own? So literally there's this shaking up of that monetary policy happening right now in real time. And because of that, and we'll cover this again later, we're seeing a flight to gold. Gold has been around like 5,000 years, something ridiculous like that. Like it has withstood the test of time as the original world reserve currency, global reserve currency. Like no matter where you went, you could trade gold. Now there are some limitations with that, and obviously you got to know the purity and all this other stuff with it, but it has been and will continue to be money. And those that are in power in other countries are kind of stockpiling that, it seems, or others looking at what could potentially happen. Maybe they're the ones driving the price up. We really have no idea. But we're going to dive into four different clips from Jack, where he's talking about the signal now that we are potentially about to see the money printers go burr and Bitcoin start to crank higher.
My screen of an article that was published on April 10th, 2025 by The Economist that was then taken down. Okay. Title of the article: America's financial system came close to the brink. Chaotic markets threaten to trigger a full-blown crisis. Okay. We are viewing this screen share on archive.today. This is an archived version of what was an article published by The Economist that was taken down by The Economist. So we've been saying on this show that these financial markets are buckling at the knees. They're going to collapse. You've got dollar down, bonds down, stock market down, mayhem, trouble, alert, alert. You had the Secretary of the U.S. Treasury saying, we're focusing on the 10-year, we're focusing on the 10-year, we're focusing on the 10-year. And what have we said the last few episodes? Hey, buddy, wake up. The 10-year's going the wrong way. You're going wrong way down to one way, brother. Wrong way down to one way. The 10-year's going up. The 10-year's going up. The stock market's going down. Bad news. Danger, danger. Okay. Now, The Economist wrote a piece admitting all of this and saying, this is the U.S. financial system is about donezo. We are in serious trouble. Now, they since have taken that down. Shout out to archive.today. So just to set the tone, the U.S. financial system is in serious trouble.
So that is actually kind of a major red flag. And Jack's mentioned this as well. He's like, it's not hard to make money. All you have to do is buy something that they cannot make more of and pay attention. And I think Ralph Powell has mentioned this as well, and someone else that I follow, that they will tell you what they're going to do, because the only way that they can continue this ruse and get you to invest your hard-earned dollars, your sweat equity, your time and energy, and they can steal that from you, is by you having confidence in the system and trust. So that means they have to kind of do the 3 T's of communication. Tell you what they're going to do what they said they told you, and then tell you what they did. So they kind of telegraph their moves, and this is one of those examples. However, this article has since been pulled down, but when you have mainstream media publications saying we're on near a brink of collapse. I mean, it could be just headlines and clickbait, but it's also their way of letting you know what's going on, because they don't want you surprised. Because if you're surprised, then you make emotionally based decisions, and they can't sway your opinions as well with those emotionally charged decisions. Let's go to the next kind of red flag. So this was the one that just kind of set the tone, and they since pulled that down. These are the three levers being pulled right now to inject liquidity.
Is financial authorities saying they will print the money. Now, if you're an avid listener to the show, I know some of this is repetitive, but I'm laying the groundwork in the context. Trust me, hang with me. This is from the Financial Times. Federal Reserve, quote, absolutely, end quote, ready to help stabilize market if needed, top official says. Guys, what we've seen since 2019 is if the Treasury's market gets unruly and gets out of whack, financial authorities will immediately step in and provide liquidity, print the money, support the system. Only way out is through. The only way out is through. Don't care what anyone has to tell you, where they went to school, what they do for work, who their mom or dad is. None of it matters. They have to print the money. As soon as the Treasury market gets out of control, they scream, and they publish in all media, we will print the money.
So that's the Federal Reserve making that statement. And recently, Jerome Powell was on, I forgot what he was on, but he was talking about this as well. And he made similar statements. He likes to kind of tiptoe around things, but he's also, again, out there has to be kind of transparent, let people know so they can hedge their bets. So the Federal Reserve, according to the Financial Times publication, saying that they will print the money. The next one up is going to come from the Treasury.
Next, now this is a even bigger deal. Now I'm sharing a Bloomberg article titled, Bessent says Treasury has a big toolkit if needed for bonds. Now, we just heard from the Federal Reserve, the central bank that prints the dollars, okay, that they have the Treasury markets back. Now we're hearing from the Treasury Department, the Secretary of the Treasury, saying the Treasury has the tools to print the money, okay? So now you're hearing from the Fed and the U.S. Treasury that when it comes to the bond market, when it comes to the sovereign debt crisis that Jack and the Money Matters podcast has been screaming about in this big empty closet, and everyone's like, is that guy 12 years old? Is he 30 years old? What's going on? I've been screaming. Sovereign debt crisis. Treasury market is unstable. None of this is going to work. They have to print the money. Buy Bitcoin while you can. Kicking and screaming and kicking and screaming. Now we're seeing it in the headlines, okay?
And that, again, is a big red flag to pay attention to, because it's, again, like Rob Powell said with the Everything Code, it's that they have to print the money. It's because we have debt that is maturing this year. I keep forgetting what the number is, between 6 to 9 trillion. And that was because in the previous administration, they didn't have the tools available. Nobody wanted to buy 10-year bonds for the debt. So it's like you going to someone saying, hey, I got this, I need a loan from you. I'm good for it. Let me get it for 10 years so I can get a lower interest rate. They're like, well, bro, over the last 50 years, you've gone from 1 trillion in debt to 36 trillion. So you've increased your debt by 36 times. I'm not quite sure I'm going to give you 10 years on this loan. I'll give you 1. So that's what happened. The bonds were only able to give a 1-year maturity. And now that is due. So they have to find someone to buy these bonds. And that's where the Treasury can step in and buy them. And that's also where they can kind of kick this out to the public and they can come in and buy the bonds.
They'll print the money. Now what's 3? 3 is the U.S. banking system will help print the money. Treasury explores whether to ease capital rule on U.S. bonds. This is the SLR. We've been saying this on the show over and over and over and over again. There is a rule that requires banks to post necessary collateral to use leverage to participate in the bond market. They are looking to revoke and change that rule so that banks can buy unlimited amount of dog shit debt for the U.S. government without posting any collateral. This makes them unlimited buyers, supplying unlimited demand for a product that nobody wants, which is lending money to someone who's already $36 trillion in debt. Okay, so recap. The Economist...
So that's crazy when you think about it, because this is what happened with the 2008 crisis when everything blew up and what ushered in Bitcoin in the first place. So there is no other solution. And when you start to actually zoom out and listen and understand how this financial house of cards was built, it has to collapse. And history has shown us that it always has collapsed. So when you start putting all those puzzle pieces together and going, okay, wait, this is literally the playbook. Like, there is no other option. Whenever you put a monetary policy together that allows someone to make their own amounts of it and set the supply and ratio and interest rates based off of whatever they're feeling at that time, albeit if it's in the best interest or not of the people, we don't know, but that eventually is going to fail. Why? Because humans are flawed. So if someone's going to screw that system over, make a bad decision, there's going to be natural causes and things that happen in the global markets, like all sorts of, like, you cannot fix that whenever humans are at the wheel of that economic engine. That is why gold has survived for so long, because it takes so much sweat equity and energy to get more out of the ground from it. But they've already put paper gold out there to kind of add leverage on top of that, so we've already screwed that up. And that's what makes Bitcoin literally flawless, uncorruptible, because no one can make more of it, and no one can change the code, and no one can even 51% attack it due to the amount of energy that it would take. You would spend more energy attacking it than you would if you were to invest that energy into buying Bitcoin. So it's like I think it's Morgan Creek, I can't remember the guy's name right now, but he's like, it's a truth layer. So like we went from the trust net to the truth net, and that's where we're at right now. You don't have to trust anything. It is just truth, unequivocal truth. All right, so with that though, with the bonds he's talking about, I don't know if you're familiar with this proposal that came up from VanEck around Bitcoin-backed Treasury bonds, where the concept was presented at the Strategic Bitcoin Reserve Summit, and the aim is to basically offset the $14 trillion debt that we have, because again, like I just mentioned, nobody wants to buy the US debt at 10 years so they can get a lower interest rate. They're like, you guys are financially irresponsible. I'm not gonna sit here and hold this for 10 years because God knows what the hell it'll look like in 10 years. So this proposal allows for Bitcoin to be 10% of that 10-year security. So 90% would be the US Treasury, the dollar basically, and 10% would be BTC. So at maturity, investors would receive the full value of the US Treasury portion, which would be $90 on the $100 bond, plus the value of the Bitcoin allocation. So I heard they haven't finalized this. This has not been approved, but I heard two options with this from Matthew Siegel. He was on a podcast when he pitched it. And the idea would be, in the best case scenario for the US debt, is that in this scenario, you're buying $10 worth of Bitcoin, right? And then 10 years from now, they could give you that Bitcoin back that you bought, which means you would have way more value. Or the better side, so if the US never gets rid of or sells the Bitcoin, and they can actually continue to fund this, will be they give you the US dollar equivalent. Now, for us that are watching this and we're familiar with crypto, you wouldn't want the US dollar equivalent. But for those that still believe in the old system and they cannot unplug, like in the Matrix scenario, then this would be very good for them, because they would get the interest accrued on that Bitcoin in the payout of the fiat currency, which they trust and believe in. So it's a win-win for everybody. Only problem is the red tape that it takes to get that extended or created in the system. So I'm not saying this will go through, but the point is there are talks about it, because again, this has to be solved. There is debt that is coming due and they don't have the ability to kick the can down the road. We also need the Fed to lower the rates so that they can refinance the debt at a much cheaper interest rate. Lastly, this is also very similar to what USDC and USDT are doing, and some other stables. I think FDUSD, and I think also what World Liberty Fi will be doing with their stablecoin. So they're all buying treasuries because it is backed by the full faith of the US government. So it's like, you know that it will still be there, and we know that the dollar's not going to collapse anytime soon. It may not be the world reserve currency, but it's not going to collapse upon hyperinflation anytime soon. So we have the tools to definitely keep that going, and these stablecoins are able to issue stablecoin. The stablecoin issuers are able to issue stablecoin, and that means that the cab driver out here in Cambodia is able to get a better currency than the Cambodian real. So there is again another use case that helps kick the can down the road for the debt. So all that really says is that the money printer will go burr, because they have to, be it coming from these backed bonds, or as Jack mentioned, coming from the Treasury, or coming from the Fed, or coming from the banks, or coming from stablecoins with more adoption. The point is that there's no other solution. Bitcoin will continue to go up unless, again, some crazy black swan event happens. But over a long enough time horizon, when in doubt, zoom out. Bitcoin will continue to be the absolute best strategic play in the game. And like I showed you guys before, with gold, like I still believe Trump could and will do this gold revaluation, because that can be done with an executive order, because that is what was done in the first place. I just feel like that would be kind of the ultimate boss move that would just be an ego play for him. Maybe there'd be some other ones as well with the bit bonds, but I guess the TLDR I'm trying to get at is that there's no better time to be in the markets, or at least paying attention, because there are so many catalysts stacked up that if you are sitting on the sidelines, or you're hesitant, or you're second guessing, or whatever the case may be, it's like, damn, this can get crazy very, very soon. And what Jack talked about later, that I'm not gonna go too much into, because he pulled up some charts in the QQQ, but basically about Bitcoin and the stock market decoupling. That was his thesis that's going to happen this year, and it looks like it's starting to look that way now. Bitcoin was up like 2.5%. Stock market was down 5 or something like that. I can't remember what it actually was, but that's what this shows on Watcher Guru. There's just more volatility in the stock markets, and the crypto market, especially Bitcoin, is kind of doing its own thing. And that again goes back to the chart I showed in another video that showed like M2 with Japan, Europe, and somewhere else I forgot that's already injected. So it's like we see that lag playing out right now in real time. So we'll see by the end of the second quarter. That's where I said I would make my firm decision about us being in a bear or bull market, or us chopping sideways for another 2 years. But even if we chop sideways, just want to end on this, it's like that's a great opportunity to accumulate more. Like holding a range with Bitcoin is like basically you able to accumulate more, and then whenever we do rip, you have been able to stack more sats at those levels. The sooner we blast off, the less you are able to convert your fiat into Bitcoin. You get less Bitcoin for your fiat, basically. So I'm perfectly comfortable at these levels, to be honest. I think it's great. And I would, of course, buy more at lower levels, but that feels just more emotionally jarring when you see the charts drop like that. So even though I wasn't able to accumulate back here in the 16K range literally just 2 years ago, I'll take the 80K that I'm stuck buying at now. I think it was Matt Kaiser. You get Bitcoin at the price you deserve, or maybe that was Michael Saylor. So I made the dumb moves by chasing shit tokens and stuff like that in the last cycle, and this is the price I paid, 4x volatility on it. Could have been buying it at 20K, 16, 20K. Like that was, God, how many years? Like from 13 June, we'll call it here, June 2022 to June 2023. So I could have, for a year, you pretty much got it below 20K. And I was too busy with my head up my ass chasing cold community tokens. So this is the price I deserve. So hopefully you guys that are watching me now don't make the mistake I made and you end up buying it, you know, when it 4X's from here, 250K at 3X from here. So anyway, that's my rant, piggybacking on Jack's rant. Hope that provides some value. Smash that HBO special, help brother out, like, subscribe, comment down below. And until next time, live daily and achieve your impossible. See you.